After we have a chat to our most important guest on a Thursday afternoon every fortnight is Mary Holm. Mary, lovely to catch up.
Thanks very much, Mark.
Last couple of times I've been on with you, which has been a real pleasure. It's been great.
We seem to have coincided. Yes. Yeah.
So anyway, now we've said here, we've headlined this fact that it's all about a quiz today. How is your financial wellbeing? Tell us a wee bit about this.
It's a quiz that's been put together by Te Ara Ahunga Ora, which is the te reo name for the Retirement Commission. And it's not actually issued to the public, although it's not secret, but they give it to organisations all around New Zealand who are working on improving people's financial literacy. And the idea is that they can, they might have a group of people coming along to an evening or a course or something and can give the people this test before the course gets going and then afterwards to sort of judge if they've picked up some knowledge along the way. But I just thought it's actually, so it's not like the quizzes that I've done before in this slot where they've mostly been about how much financial knowledge you have, but this is more about how well you're running your money. And some of them won't apply to people, but the idea is more, not so much keeping track of how many you got right out of 15, but are there some points here that you might want to look at?
Changing your patterns or your, routines.
But because these days especially, we see more and more about people struggling financially, and I suspect a lot of them don't really need to if they sort of got things a bit more organised in one way or another. So
now we'll start by saying that this quiz, the link to the quiz, is actually on our afternoons page. So if you want to take a look at this, the link is there. So just go to rnz.co.nz and the afternoons page. You'll see a photo of Jessie there. Click on that and that link will be available to you. I can tell you, just because I will. It's Tiny Earl, so it's TinyURL, tinyurl.com/moneynz. So tinyurl.com/money with a capital M, NZ with two capitals. So there we go.
That's just a link that I made. You can go to tinyurl and make a short link so you can say it over the radio. So it's actually the Retirement Commission's website that you're going to.
All right.
Yes.
Excellent.
Yeah.
So how do we start? What happens with this?
If we just sort of
read
through and discuss each question, I thought the first one is, do you or your whānau typically set aside money for savings? And all of these questions, actually, there'll be people who will say, well, I actually don't need to. And this, for example, they might be retired and they're probably not saving at that point. They're probably, hopefully, spending their money. But so you've got to just sort of say, well, this one doesn't apply to me when it doesn't. But for most people, it's a good idea to be setting aside some money for savings.
A lot of people these days feel like they don't have money for saving.
That's right. Yeah, which is... and gosh, you just hope people, and I think it comes up in a minute, would have some money set aside for when things get difficult. So the second question is, in the past 6 months, have you or your whānau increased the amount of money you regularly set aside? So the idea there is to encourage people. I mean, I've always said, if you haven't got a lot of money, just set aside $5 or $10 a week. It really does add up. But putting it just in a bank account, actually, in order to get enough for emergency money, and if you've got enough set aside for that sort of thing, then stick it into a KiwiSaver. You can always do that. Over and above, if you're an employee and the money's coming out of your pay, you can still directly to the provider, not through work. Just your boss doesn't need to even know about it. It's none of their business.
So all this is focusing on your retirement, effectively, isn't it? It's how you're going towards that. Because putting it into your KiwiSaver means it stays there, doesn't it? Until you.
Yes, I think some of it's focused more on just getting by and just living. Actually, yes. question 3, so question 2 is about increasing the amount of money you
Yes.
regularly set aside. And the suggestion there is every time you get a pay increase, or if in some other way you feel a little bit better off, or perhaps the kids leave home, or, I mean, there are various different things that happen in people's lives and they suddenly got a bit more money than they did have before,
Yes.
or you've paid off a loan. If you can increase the amount you're regularly transferring, set up automatically in the bank ideally, and then you can just forget about it, which works really well. Question 3 is how much could you or your whānau access if you urgently needed it without having to borrow? And the answers range from 0 to more than $5,000. So the idea is that that'd be a good amount to aim at, would be 5,000, but even having 500 just set aside for when things, so unusual expenses.
Yeah.
We know the regular stuff at the car breaks down, or you have to go to the dentist, or there are things that aren't in people's regular budgets.
Yeah.
And
it's funny how that always happens at the worst time, doesn't it? It
Yes.
always seems to happen when you think,
Yes.
oh, God, we're just getting our head above, and then suddenly, oh, my God. Now
And
we're
it can happen in threes,
Yes,
Mark. Have you
yes.
noticed that?
Yes.
Oh, gosh, what's the third one that's going to happen?
Yes.
And so really in terms of sleeping at night and all that, a really good idea if you can get that amount set aside. For you, it could be even more than 5,000, but they're sort of suggesting that's a realistic
But
goal.
as you rightly point out, any amount is a start
Yes.
and good, because it will slowly build.
Yes.
And it's amazing how quickly, how it does build.
It does build, and these days you're still getting reasonable interest in a bank account, actually, which helps it to build. Question 4, how many of the following debt products do you or your whānau owe money on? So that doesn't include mortgages or business loans or student loans.
Right.
They're sort of regarded in a different light. But we're looking at buy now, pay later, or store cards, credit cards, bank overdrafts, car loans, personal loans, payday loans, or money owed to friends or whānau.
Right.
So we're looking at all these different ways that people owe money.
Yeah.
And so if you've got, and the range of answers is from 3 or more to none.
Yes.
Obviously, if you've got quite a few of those debts, it'd be a really good idea to get rid of some of them.
Yeah.
Yeah.
So the next one's pretty straightforward. Do you or your whānau have a home loan? So
Home
it's a
loan
yes or no.
or mortgage, otherwise, yes.
Yeah.
And
then the question 5, how do you, I don't know if we'll be able to get through all the 15 questions, but
Yes.
are there others that are that you'd
we can
like to
probably
point out?
summarise them pretty
Yeah,
quickly,
sure,
actually.
You go for it.
Do you or your whānau typically borrow to pay for essentials or pay for emergency situations? Ideally, you don't borrow for anything, so that's not a good pattern to be in. Which debt repayment typically reflects you or your whānau? And that ranges from, well, not having any debt, but being unable to pay any of the required payments to paying more than the minimum off a debt.
Yep.
So
That's the range.
Yes,
Yep.
that's the range on that one. Question 7. In the past year, have you or your whānau taken actions to reduce the interest you're paying on your debts? So that you can do that by sometimes consolidating loans at a lower interest rate,
Yep.
or switching to a cheaper provider, or that's the sort of area where if you go to the Money Talks website, you can get a free financial advisor who will often help you to do that kind of thing, and I really recommend that for people. Yeah, should be able to find one in your part of the country. Next question, how many times each month do you or your whānau typically have to pay extra because you missed a payment? So this is late fees, default fees, loss of prompt payment discounts, etc. Obviously not ideal if that's happening too often. Question 9, in the past year, were you or your whānau able to lower the fees associated with your bank accounts, cards, KiwiSaver or investments? So yes, there are various ways you can lower those fees. That's really harking back to the previous questions, actually, I would say. Well, lowering fees on KiwiSaver will be moving to a cheaper provider. With your bank accounts, it might be a case of talking to the bank or, and in other ways, trying to get those fees down because they do eat into your wealth. Question 10, are you or your whānau actively contributing to KiwiSaver or other investments? And that is a really good thing to be doing, obviously. Yeah. I mean, people do take saving suspensions when things are getting tough, but try not to do that for too long. It's not
pattern
great.
going.
Yeah, if you can just keep those contributions growing, they really, really do grow. Have you, in the past 6 months, have you or your whānau increased the regular amount you contribute to KiwiSaver or other investments? So that's the idea of adding a little bit more when you can. Once again, it adds up over the years. Question 12, have you or your whānau checked if your KiwiSaver or other investment choices are in line with your goals? Are you in the right fund type? All kinds of investments based on your time frame and risk level. So basically, I would say go if you're not sure if you're in the right KiwiSaver fund, go onto the Sorted website and have a look at
the options,
the KiwiSaver Fund Finder tool, and that will help you to find the right risk level for you and the right.
And it's really straightforward to change it too, isn't it?
Yes, it is. Yes, all you have to do is go to the one you're moving to. You don't have to go to the provider you're leaving. Just go to the one you get in touch with them, and they should welcome you with open arms and make it easy. They'll move the money for you.
Great.
So the last three are about insurance, and basically the three questions are asking, have you got cover for various things? And I'll just quickly list through this because a lot of people won't think about all the types of insurance. There's health insurance, which is people can do without, but it certainly can be a help for a lot of people. Home and contents, third party or full car insurance, funeral insurance, which is not absolutely necessary. That's one that people sometimes get to just cover the costs of their funeral. If you've got enough money, anyway, you don't need that particular one. Life insurance, terribly important, and if you've got people who are depending on you, not necessary if you haven't. If quite a lot of people by
and
the time
banks
they get
as well will require.
Sorry, what's that?
Banks.
Oh,
for
yes,
mortgages
if you've
and
got
things
mortgages, yes, that's right. But once you're past the mortgage stage and you haven't got debt, quite often couples still continue their life insurance and they don't actually need it. You just want to think about whether how the others in your family would cope if you weren't there. And quite often they'd be fine, actually. They'd be fine financially, we should say. Income protection insurance is another one that is really good to have.
Which only lasts, I think, until you retirement age.
Well, typically you'd be paying. Yes. By the time you're retired, you wouldn't be doing it. But
you wouldn't need it.
It's a good one to have while you're working because you might not die, but you're disabled and suddenly you're not bringing in the income. So and then finally we've got, have you and your whānau got a will plus enduring powers of attorney for health and for property? We haven't really got time to go into that in detail, but that's about appointing somebody else, usually a family member or close friend, to look after your health issues or your financial issues if you become incapable of doing that. So you're still alive, but you're not capable of doing it anymore. Yes. And then, of course, there's the will. And apparently a lot of New Zealanders haven't got a will. And I've just been reading about that today for the column I'm working on. It's not a very good idea at all to have no will. You can just go to a stationer's shop or go online and buy a will. They're not necessarily the best. Lawyers say, well, it's better to come to us, but you can do a will on your own and just file it away, legal, and it makes it a heck of a lot easier.
Because otherwise everything goes into public trust or something.
Yes, it's a long process and it doesn't necessarily go to who you want it to go to. So it's a really good idea, even just to get an online will, fill it out and tell your close family where you've put it.
Yes.
And that's way, way, way better than nothing. And then the final one is Have you thoroughly reviewed your insurance and your will and your powers of attorney and so on? And so that's just saying even if you've ticked those boxes, every now and then you should be looking at them again to make sure you're still happy with them.
Yeah. Fantastic. So who do you think will be looking at this? I mean,
I hope
everybody.
Everybody, actually, because, yes, it doesn't... In fact, a lot of them don't apply to retirement, really. They're everyday things.
Yes.
And, I mean, some people will get a big tick on every one of them, but I will be surprised if many do.
Yeah.
I think quite a few people will think, oh, I should look into that one. Yeah.
And that's good, isn't it? It's great to have that
Yes.
advice. Hey, thank you very much.
It's a pleasure,
as always.
Mark.
Once again, I'll give you that link. I suggest you just go to rnz.co.nz to our afternoons page, and the link will be there. You can do that and fill the quiz out for yourself, which will be fantastic.